Cash flow for Unit 1. So I've broken this down into two separate sections for cash flow because it's quite a long section. So in this presentation, we're just going to be looking at how to interpret simple cash flow statements. So key terms, first of all, cash flow is just the money coming into a business and the money leaving the business. So it could be money made through sales, so revenue, or it could be money that's coming into the business because you've taken out a loan. Opening balance is the money that the business has at the start of the trading period. So I'm going to go and show you a cash flow statement in a second, and these will become more obvious what they are in a second. Net cash flow is the difference between cash in, so the money flowing into the business, the receipts, sometimes known as, and the cash going out. So payments or expenses, that's usually known as. And the closing balance is the amount of money that the business has at the end of a period. And this is the opening balance plus the net cash flow. So if we look at an actual example, it becomes a lot more obvious. Now, the thing to warn you about when you're looking at cash flow forecasts or cash flow statements is that for your exam, you're not actually going to have to put one together. But I always make my students do it because I think it's very hard to understand cash flow forecasts if you can't put one together yourself. But just remember, you're not going to be asked to have to do this. So this is, as you can see, a cash flow, but it's a forecast. So they're forecasting the amount of money that they're going to have coming into the business and leaving the business. And in the second presentation, I actually look at the reasons why you'd want to create a cash flow forecast. But first of all, first thing to do is work out the net cash flow. Now, the net cash flow for each period, and here we have it in months, although you could do it in weeks if you really wanted to, or even in years if you really wanted to get an overview over a number of years. But here we've got it in months, and the net cash flow each time is just going to be, where's my mouse? It's just going to be your receipts, the money flowing in, minus your payments going out. So we can see this should have been ready done for me as if by magic. Now you can see in this first month, in January, I've actually put brackets around the number. Now brackets mean a negative number because we've got £4,000 coming in, but we've only got £4,000 coming in, but we've got £10,000 worth of payments leaving the business. So that means that there's £6,000 gap there. So that's why it's got brackets around. But for all of the other months, you can see 5,000 minus 250 is going to be 2,500 there, and you can see all of the numbers across there. Okay, so the opening balance would have to be provided to you for the first month or the start of the first period that you're looking at on the cash flow forecast. But your closing balance, as we saw before with the definitions, is just the opening balance plus the net cash flow, or net cash flow plus the opening balance. It doesn't matter which way around you do it. So minus 6,000 plus 3,000 should be minus 3,000. We can see it's a minus because it's got brackets round. Now the opening balance of the next operating period, which will be February, is just the closing balance of the period before. So we take that number and it goes up there. So we should get it, and we start again. So we add 2,500 to minus 3,000 and we'll have minus 500. Then that closing balance becomes the opening balance of April. We add that to the net cash flow for April and we have 2,900, and so on and so on and so on. And that is your cash flow forecast. So just briefly looking at this, and I'll do it in more detail in the next presentation, we can see that there's going to be a bit of a problem with cash flow in January and February, and no problems with cash flow onwards until July. So another really important thing to remember, and this is something that even my A-level students mix up, is that cash is not profit. When you're looking at cash flow forecasts, it's just looking at the money coming into a business and the money leaving the business. It's not looking at profit. Profit is something very specific. Profit is revenue minus costs. Revenue being money that you've earned by selling goods and services. Now, some of the money that comes into your business is not going to be revenue because it could be money that you've borrowed from a bank, say, or money that you've got from a government through government grants or something like that. So here we have an example of a business. Here's their revenue, £30,000 minus £20,000 equals £10,000 profit. So we can see that that's a profitable business. They are making profit. However, if they've had to pay for these costs up front, so they've got £20,000 flowing out of the business, but they've given the people that have bought from them some trade credit. So they've said to them, look, you can pay me in 30 days or 60 days. They will have had to pay out this £20,000, but they won't have got in the £30,000. So that's going to cause some cash flow problems, but it doesn't mean that they're not a profitable business. And then if we look at this example here, again, profit is revenue minus costs. If we have £15,000 worth of revenue minus £20,000 worth of costs, we know that that's going to be a loss. There's no profit made there. It's a £5,000 loss. But what we could have is the £15,000 has come into the business, but you've not had to pay yet for the materials that you use to make those products. So if your supplier has given you trade credit as a business and you've got 60 days to pay, you might find that the £15,000 has come into your business and the £20,000 hasn't gone out of the bank account yet. So that would say that you've got a good cash flow position, you've got cash, but you're not profitable because that money eventually, that £20,000 will eventually have to be paid. So that's the difference between cash and profit, and it's very, very important that you recognise that. So what I hate seeing when I've got students talking about cash flow questions is I hate them talking about profit. And it's very, very common, as I said before, you'll see it in A-level students' work all of the time, but the good students know that when they're looking at cash flow and cash flow statements and cash flow forecasts, they shouldn't be mentioning profit.